Hey there, moneymakers. Welcome to the jungle. No, I'm not talking about some tropical rainforest. This is the stock market, baby, and it's wilder than ever. Why should you care? Because this is where fortunes are made and lost, people. You snooze, you lose. We're talking about your hard-earned cash, your retirement dreams, your chance to finally buy that yacht you've always wanted. You can't just throw money at the market and hope for the best. You need to be informed. You need to understand the trends. You need to know what's hot and what's not. That's why staying updated on stock market news is absolutely critical. Think of it like this. You wouldn't walk into a casino and bet your life savings on a game you don't understand, right? The stock market is no different. Knowledge is power, and in this game, knowledge equals profits. Booyah! So, how do you arm yourself with this knowledge? You need tools, strategies, and a keen eye for detail. Start by following financial news channels, reading market analysis reports, and keeping an eye on economic indicators. Attend seminars, webinars, and workshops to learn from the experts. Consider consulting with a financial advisor who can provide personalized advice tailored to your financial goals. Utilize stock market apps and tools that offer real-time data and insights. Remember, the more informed you are, the better your chances of making profitable decisions. Diversify your investments to spread risk and increase potential returns. Regularly monitor your investments and be ready to make adjustments as needed. With the right knowledge and tools, you can navigate the stock market jungle with confidence and success. Alright, let's talk titans. First up, Reliance Industries. This ain't your grandpa's oil company anymore. We're talking telecom, retail, and even green energy. This conglomerate is a behemoth, a true heavyweight in the Indian market. When Reliance sneezes, the whole market catches a cold. So, what's the latest? They're making big moves in 5G, expanding their retail empire, and even dipping their toes into the electric vehicle game. Is this a stock to watch? You better believe it. But remember, even gorillas have their weaknesses. We'll dig deeper into their financials and chart patterns later. Stay tuned. Next up, we've got Infosys. They're a giant in the IT world, a symbol of India's tech prowess. But are they still at the top of their game? The tech landscape is changing faster than ever. Cloud computing, artificial intelligence, cybersecurity, it's a whole new ballgame. Infosys needs to adapt, innovate, or risk getting left behind. Recent earnings reports have been mixed. Some analysts are bullish, others are cautious. It's a classic case of buy the rumor, sell the news. So what's the verdict? Is Infosys a buy, a hold, or a sell? We'll need to dive into the numbers and charts to find out. Last but not least, we have HDFC Bank. This is the gold standard of Indian banking, a true bedrock of stability. But even rocks can crumble. Rising inflation, interest rate hikes, and a global economic slowdown are putting pressure on banks everywhere. HDFC is known for its prudent lending practices and strong balance sheet. But they're not immune to macroeconomic headwinds. So, is HDFC a safe haven in a stormy market? Or is it a ticking time bomb? We'll analyze their financials and technicals to get a clearer picture. Section 5. Diving deep. Fundamental analysis for smart investors. This is where the rubber meets the road. Alright, enough with the hype. Let's get serious about making smart investment decisions. Let's get down to brass tacks. We're talking about the core principles that drive a company's value. It's time for some fundamental analysis, baby. What does that mean? Simple. We're diving into the essential elements that make a company tick. We're looking at the nuts and bolts of a company. This includes everything from their revenue streams to their profit margins. Revenue, earnings, debt, cash flow, the good stuff. These are the metrics that tell us how well a company is performing. Remember, a company's stock price is only as good as its underlying business. The stock market can be volatile, but strong fundamentals provide stability. If the fundamentals are weak, the stock is living on borrowed time. It's crucial to identify these red flags early. We'll be analyzing key financial ratios like price to earnings, price to book, and debt to equity. These ratios help us compare companies and assess their financial health. We'll also be looking at their management team, competitive landscape, and overall industry outlook. A strong leadership team can make all the difference. It's time to separate the wheat from the chaff. By focusing on these fundamentals, we can identify the strongest investment opportunities and avoid potential pitfalls. Section 6. Charts don't lie. Technical analysis explained. Fundamentals are crucial, but don't forget about the charts. Technical analysis is like reading tea leaves, but for stocks. We're talking about analyzing price patterns, trading volume, and other market indicators. It's about identifying trends and momentum. Are we seeing a bullish breakout or a bearish breakdown? Is the stock overbought or oversold? Technical analysis can help us answer these questions. Remember, the market is driven by fear and greed. Technical analysis helps us understand the psychology of the crowd. Section 7. Global chaos equals your portfolio's roller coaster ride. Here's the deal. The Indian stock market doesn't exist in a vacuum. It's part of a global ecosystem. What happens in the US, China, Europe, it all affects us. We're talking about interest rate hikes by the Federal Reserve, supply chain disruptions, geopolitical tensions, the whole 9 yards. Remember the Russia-Ukraine war? That sent shockwaves through the global economy, and the Indian market was no exception. We saw a sharp sell-off, followed by a period of volatility. The point is, you need to stay informed about global events. They can have a major impact on your portfolio. Section 8. Be a market master. Welcome to your daily dose of Stock Savvy, where we break down the complexities of the stock market into digestible insights. All right, I've thrown a lot of information at you. Now, you're probably wondering, how do I stay updated with all this market madness? With so much happening every day, it can feel overwhelming. Don't worry, I've got you covered. Staying informed doesn't have to be a daunting task. Here are some tips to stay ahead of the game and keep your finger on the pulse of the market. 1. Read financial news websites. Bloomberg, Reuters, Economic Times. These platforms provide up-to-the-minute news and in-depth analysis. These are your best friends when it comes to staying informed about market trends and economic shifts. 2. Follow market analysts and experts. Find some voices you trust and pay attention to their insights. They often have years of experience and can offer valuable perspectives. Their analyses can help you understand the bigger picture and make more informed decisions. 3. Use stock tracking apps. There are tons of apps out there that can help you monitor your portfolio and get real-time market data. Apps like Robinhood, E-Trade, and Yahoo Finance are great tools. These apps provide real-time updates and alerts, ensuring you never miss a beat. 4. Join online forums and communities. It's always helpful to connect with other investors and share ideas. Platforms like Reddit's RJ Stocks or StockTwits can be great places to exchange information. Engaging with a community can provide new insights and help you stay motivated. Remember, knowledge is power. The more informed you are, the better decisions you'll make. Stay curious, stay informed, and keep learning. With these strategies, you'll be well on your way to mastering the market and making savvy investment choices. Section 9. The surprise inside, your golden ticket to stock market success. You've made it this far. As a reward for your dedication, I'm going to let you in on a little secret. The real key to stock market success isn't some magic formula or secret indicator. It's about having the right mindset. You need to be disciplined, patient, and willing to do your homework. Don't get caught up in the hype or follow the herd. Remember, investing is a marathon, not a sprint. Stay focused on your long-term goals and don't panic sell when the market gets bumpy. And most importantly, have fun. Investing should be exciting, not stressful. Section 10. Don't just sit there. Your portfolio is calling. So there you have it, folks. The Indian stock market is a wild ride, but it's also full of opportunities. Now that you're armed with the knowledge and tools to succeed, it's time to take action. Don't let fear or procrastination hold you back. Start researching, start investing, and start building your financial future today. Remember, the only bad time to invest is never. Booyah!